All right, guys, today I have the pleasure of meeting up with Leo Anzoleaga of DK Mortgage. He is a mortgage lending professional, loan officer, whatever the title is. I have Leo explain his title better than I just explained it. But he is one of my go-to guys that I go to when I have any mortgage-related questions. So I brought him here today to just help clarify the mortgage process. So Leo, just want to welcome you on the second episode of the Cesar Rivera Show. Can you tell my audience a little bit about yourself and what you do?
Yeah, thank you, Cesar. I appreciate it. Thank you so much for having me. I've been in the lending business for 16 years this past March, and I've literally built my business strictly by referral, right? So that means that I haven't done any formal advertising, just been serving clients, referrals such as the ones that Cesar refers me, and those people have obviously referred me clients of similar quality to themselves. So in a nutshell, what we do, our company, is we actually provide the money for you to buy a house or the money for you to refinance the mortgage. So we are direct with all of the agencies, Freddie Mac, Fannie Mae, Ginnie Mae, and we finance the loans in-house. So that's a little bit about who I am, how I built my business, but also obviously exactly what we do in terms of the home buying process.
Gotcha. And do you do a lot of, can people work with you in any part of the country?
Yes. Our institution is actually licensed in the majority of the country, and that we can do loans, anywhere, not just in the DC metropolitan area, but all over the U.S.
Gotcha. And what I'll do is at the end of the show, I'll pass along your information. I'll have it in the show notes so people can reach out to you and connect with you in any, mortgage related, questions they may have going forward.
That's great.
Cool. So one of the things I wanted to discuss, and these are certain things when I, as a real estate professional, when I meet with a client for the first time, one of the first questions I would ask is, have you been pre-approved before?
Right.
And, a lot of times people meet up and, they'll say, yeah, I know what I qualify for. And I'll ask, well, how did you go about the process? And, they'll go online, maybe pull up a mortgage calculator, check their credit, but may not know exactly what they qualify for. And, the last thing I want to do is, have someone go out, look for some homes, maybe put an offer in, only to find out that they don't qualify on it and possibly lose out on a home, or, have themselves emotionally, kind of in that mindset, like, oh, I'm getting this home. I found a home in my dreams, only to find out they don't qualify. So one of the things I do is make sure before anything, they go through the pre-approval process, reach out to a loan officer. I myself have a relationship, with your company, so I'll have them reach out to you. But, people are free to reach out to anyone who they feel comfortable with. But, it's just one of the things I have them, connect with, just to make sure that they're taking their appropriate steps to get the homes that they really want. You know what I mean?
Right. It's important for people to understand what their purchasing capacity is, right? So ultimately, and I think I'll say this throughout our entire conversation, I think you kind of also alluded to this, you have to work with whom you feel most comfortable with, right? So you and I happen to have a relationship, a working relationship, and we kind of understand our business models, which is, working primarily by referral. And that's obviously the way we've built our businesses. But again, people can choose to work with whoever it is that they feel most comfortable with. We hope that it's us, obviously, but that's well said.
Gotcha. So one of the things that I really want my audience to really understand would be, just not stuff that they find online, and you could go online and look up, how do I get approved for a mortgage and stuff like that. But there's so much information out there that could be very confusing. So one of the things I wanted to ask you, and maybe you could share some insight on from your experience and your expertise and knowledge, like to begin with, what are some of the things people should do possibly before meeting with you?
Yeah, and I'm doing this for about 16 years or so. One of the common themes that comes across with the people that are ready to move forward and buying a house is this, right? They always say that they are either A, tired of renting, or B, that they are quote unquote ready to go through the process or go through some of the ups and downs of what a purchasing transaction would look like. So I think the first advice that I would give most first-time home buyers people that have never done this before is, hey, be sure that you're obviously already, at least intellectually, mentally, to go through that sometimes overwhelming process, of purchasing a home. Now, that's the first piece. The second piece is having your financial house in order. And that's just understanding, okay, not only what kind of cash we have available now or potentially could have available in the future, but have a basic understanding in terms of what your budget per month will potentially have to look like, for the new mortgage, right? So typically most people know what the rents are that they're paying, but they don't necessarily have a budget of what they think they should be paying on a mortgage moving forward. So understanding those two things or those two principles, I think could really help someone begin the process, and when they sit down with me and have a conversation with me on the phone, those are some of the first questions that I'm going to ask them in terms of what they're looking to do, their expectations, but also hopefully have a budget in place in terms of what they're looking to buy.
Okay. So that's the budget being the main one. Any other things that you look out for too?
Yeah. I think one of the other great principles, I think for me, to kind of instill in your audience would be, don't be afraid of looking at your credit, right? So a lot of people have that big concern. It's like, well, I don't want my credit pulled until I'm quote unquote ready to write an offer on a house or until I'm ready to commit to someone. The earlier you actually get your credit pulled, in other words, the earlier you understand what your credit score looks like, but also what the report shows, the better. Because if there are any issues with the actual credit score or the report itself, you can actually fix those issues prior to even finding a house and being ready, having all your ducks in a row, so to speak, for that, so that you don't have to wait on any other items or wait on any other things that need to be fixed prior to making an offer. So I think number one, being ready literally means to, being ready to kind of go through the ups and downs of what it will potentially entail in buying a house. Two, having an idea or a budget in terms of what you're looking to spend, but also understanding what your credit score is, because those are the three main components that I think you're going to definitely need to be okay with, and also know prior to going into this process. Does that make sense?
Yeah. And one of the things you mentioned, like pulling credit and stuff like that, I always talk to people and it comes up a lot. They'll say they went on Credit Karma, all these various credit, websites and stuff like that they use to pull their credit. But then when they meet with a bank and they pull their credit, the scores look a little bit different. So can you talk to them about what's the difference between what a bank pulls and their score versus what these sites would show as a number? Because it always seems to be a little bit off all the times. I've done it for myself and talked to clients plenty of times who've gone through this process who've told me the same thing.
Yeah, I mean, simply put, the actual the algorithm for the consumer credit reports like Credit Karma, et cetera, are actually different than what we will pull, which is a tri-merge, right? So in other words, Equifax, Experian, and TransUnion. So that's kind of the first piece. And the second piece is that we're going to pull a tri-merge. We're going to look at all three bureaus. So sometimes the discrepancy either happens in A, you're looking at just one bureau, and then obviously we look at three and we will take the median of the three. And B, the algorithm is actually different than what you'll see in the consumer site versus what the lender's going to pull on their own.
Okay. And is it drastically different? I mean, from what I look at sometimes when I see, what the customer pulls on their own versus what they find from the bank, it might be almost 15 to 20 points lower typically, or higher. It typically is lower from what I see. Am I right?
Yeah. And that's actually not a bad observation. It could be a lot lower. Sometimes, it could be minor, right? Depending on which of those two buckets you kind of fall into. But it's important to get the actual hard pull tri-merge from a banking institution, because that's going to give you the ultimate number that the lender is going to go off of and find it.
Okay. And then, there's always a misconception of, saving. I need to save like 10%. I need to save 20%. People, and I always tell people, I'm not a loan officer, but I know you can get a loan as low as 3% down. And then for some people, if you're a VA, even lower, so can you kind of break down the myths in regards to down payments and stuff like that that's out there that people may not be aware of?
Yeah, absolutely. I mean, look, ultimately, and I always say this in not just interviews like this, but also in front of other people that are looking to potentially buy a house. You buy a house when you're ready to buy a house. That's the first piece. regardless of what the market's doing, interest rates, etc. You buy when you're ready to buy. Now, the misconception a lot of people have is like, hey, we have to put 20 to 25% down on a mortgage in order to secure a home. This area in DC metropolitan area, I mean, the average prices are much greater than that of Tennessee, right?
Mm-hmm.
So on average, though, and this is just nationally, most first-time home buyers are committing anywhere from 3% all the way up to like 10% down. That's the average in terms of what the down payment will look like. And there are products out there that will allow you to finance as little as 3% down. Now, the only caveat I would put to that is this, if you're looking to put 3% down on a mortgage and selling the house within 6 months, it's probably not a good idea for you to invest in real estate, because you're going to need to hold that unit for a little bit of time before you see some sort of returns, right? So the more money you put down, the higher the returns will be in the long run. But on average, 3 to 10% is roughly what you're going to see across the board for first-time home buyers.
Gotcha. Cool. So, what are some of the things people should anticipate while going through the actual mortgage process? So, I think most people have the question of how do I get qualified? What's the process like of getting approved? But the process of going through the actual mortgage process for some people who have never done it before can be exhausting. And if they don't really know what to anticipate, may feel like, they're being maybe picked on, or, the process is terrible and brutal.
Yeah. And I think it goes back to what I said earlier, right? So you have to be willing to go through the process of purchasing a house. And here's the deal. Like, I think, the lending industry has changed after the liquidity crisis, and things have gotten a little bit more robust in terms of the items that you're going to be requested to provide. But understanding that and being okay with that, the process it's not that complicated. For us, it's a 3-step process. The first one being that we're going to have an initial 15-minute conversation in which I'm going to ask you basic questions. Okay, walk me through your goals. What are you looking to do? How much are you paying in rent currently? What are you budgeting to put down on a mortgage in terms of down payment? How long do you actually plan on holding onto this property, et cetera, right? So understanding your goals, telling you a little bit about me, my approach. So that's kind of the first step. The second step is we're going to schedule a total cost analysis WebEx, where we're going to go over 3 things. Number 1, interest rates, where they are now, kind of where they're going. That's roughly about 2 minutes or so. The second piece, we're going to go over options, right? So I'm going to build a model called the total cost analysis, where we're going to compare 2 to 3 options side by side. And in those options, we're going to cover interest rate, payments, tax deductions, costs, short-term, long-term. So the bulk of our conversations, that's kind of the second step. And then the third step, or the third objective in that call, would be to answer any questions that you have, right? So no question is a dumb question. Whatever questions you have, you bring it to that call, and I will do my absolute best to answer it. So you have the initial consultation, which is about 15 minutes. You have the total cost analysis WebEx, which is about 40 minutes. And then once you're done there, the third piece here is issuing the pre-approval letter, right? Which essentially will allow you to work with Cesar for him to take you out and look at some properties and begin the next phase. So that is, in its simplest form, the 3 first steps that you will take when purchasing a home.
Okay. The other part, and the major part, I think this is the one that drives people crazy, is the paperwork.
Yep. Mm-hmm.
Like, what should people anticipate from a paperwork standpoint? You know what I mean? Because I think once, I was like, oh, why do I need to have this document? Why do I need to have that? Can you explain that process? Because I think that's the one that drives people crazy the most.
Yeah. And I think you're right. I think the industry has gotten a little bit out of hand with the amount of paperwork that not just us, but any other lender will request, right? Initially, what you're going to need to provide is your tax returns for the last 2 years. If you're self-employed, that includes your business returns, and that's all schedules. Mm-hmm. Your W-2s, if you're a W-2 employer, for the last 2 years, and your pay stubs for the last cycle, right? Mm-hmm. So typically 2. So we call it a 2-2-2 rule, right? So 2 W-2s, 2 pay stubs, and most 2 tax returns, 2 years tax returns. So that should give us an initial idea in terms of what your income is, but also what your purchasing capacity is. Mm-hmm. And that will allow us to, at the very least, get through phase 1, which is the first 3 steps that I outlined. Now, beyond that, once we issue the pre-approval letter, then we kind of enter into phase 2, And that's when we're going to ask you for the remaining documents, which are typically, bank statements, letters of explanation for some discrepancies that we find on credit, and a few other items, for you to sign, such as your application, et cetera. So the paperwork is a little bit, I guess the word's extensive, but we will break it up into phases so that it's not overwhelming upfront.
Yeah, and you mentioned the mortgage crisis and stuff like that. Things have changed drastically from in the past,
Yeah.
which is why these banks are requiring so much information from you to help. At the end of the day, the bank wants to make sure that they're lending their money to someone who is qualified, as opposed to like in 2009, where people could get approved for a mortgage without just with stated income, not having to prove anything. And of course, what happened after that. So, so one of the things I also wanted to ask, your bank, for example, it's not the major institutions like a Wells Fargo, Citibank, things like that. What are some of the advantages of working with maybe a smaller bank such as yours, who does a lot of business, by the way, not to say that you guys are tiny, but what are some of the benefits of working with a bank such as yours versus the, bigger, big name banks out there?
Yeah, I think, there's a lot of them, but one of the biggest ones, and the ones I always talk about are the ones that are tied to relationships and strategy. So let me explain what that means. So in the DC market, this market is just a super fast-paced market. Okay,
Would you say that's the same with like big major cities, like not just DC?
Yeah,
Okay.
yeah, I would say so. Yeah. So and things just move quickly, right? And what that means is simply this: inventory levels, which is just a fancy terminology that means that however quickly a property is selling, are sometimes days, if not hours, right? So if a property goes on the market within hours, things will probably that property will have a couple of offers on the table, right? So that said, relationships and strategy are super important. So what do I mean by relationships? We're being able to do the amount of business that we do in the city and in this area. Chances are that we are going to bump into the same agent on the other side, right? So being able to pick up the phone and say, "Hey, Mark," or "Hey, Susie, we've done a deal in the past. My buyers are not just qualified, but they're fully approved and fully committed to doing a loan with us," makes a big difference. So knowing the other agent on the other side makes a big difference. And that's where Cesar, if I could just add that on there, will do for you as well, right? So having that relationship on the other side, that with all the agents that he knows, makes a huge difference. So that's kind of the first one. And then the second one is strategy, right? So most banks these days are not going to be able to close a loan anywhere close, nowhere near the time that is needed in this marketplace. So typically speaking, most banks, large institutions, will take about 30 days to close because three things need to happen. Number one, the appraisal needs to be ordered, and that's roughly about 2.5 weeks. Number two, title needs to be ordered. That's roughly about 2.5 weeks to 3 weeks. And number three, the biggest one, the underwriting of the home needs to happen. In other words, the underwriter has to review your file, and that takes about 3 weeks. So the reason why it takes them 30 days is because those three things need to happen. But here's the catch: they won't look at that file until you come to terms with the seller on a price and a closing date, right? In other words, they won't underwrite the file until those two things happen. So that really puts you a little bit behind the 8 ball. What we've done is we've done the complete opposite. We actually said, look, why don't we fully underwrite this file prior to securing collateral? In other words, prior to being under contract on a home, and give the clients advantage, so that by the time we are done with the underwriting process of this home, prior to you having a ratified contract on a house, you will not just have a pre-approval letter just like every other buyer out there, but a full binding commitment from us that's going to be as good as cash. Now that's leverage. And now if there's 15, 17, I've seen it up to 21 offers sometimes in a home, that gives the consumer complete leverage when making an offer, because now it literally comes down to the actual cents and dollars, right? It doesn't come down to the financing at any point. We can close things within 10 days. So why is it advantageous to work with us? Well, because we have the relationship and we also have the strategy in place for this fast-paced market to give you an advantage when making an offer on a house. Does that make sense?
Yeah, and that's huge because let's say I'm a person who has a listing, and I have a property on the market, and I have a buyer come in with their agent, and they're showing me that they can, they're fully approved, and that they can close a home within 15 days versus someone who might be bringing the same offer with a pre-approval and asking me for 30 days. That guy or that girl with the 15 day close, or even how what's the quickest you were able to close one? I remember you told me something crazy not too long ago. What was that number?
9 days.
9 days. If you come telling me, and I'm comparing someone who wants to close in 30 days, and this Leo's is approving someone and saying they can close in 9, that person looks really good. That might sway me to go with that person, if all things are the same. So, just having that opportunity to have a lender be able to close in 9 days, that's unheard of. So when he told me that, I was shocked because, I'm used to maybe, deal if you're going with the traditional bank, you might, hear those, 30 days, 45 days, things like that. So, it's huge to hear someone say something like that.
I mean, some banks, might say, well, we'll do it on a case-to-case basis. In other words, if it makes sense. But it's our policy internally, right? And our underwriters, our processors, my assistants, my team know exactly how to execute on that, right? So it takes great skill to be able to perform something within 9 days. Now, we need to have all of our ducks in a row.
True.
To close things in 9 days. And that's why we're going to do the majority of the heavy lifting up front and minimize, the stress that we usually are put under once, we ratify in a house. So think about this. You ratify in a house. In other words, you come to terms with the seller on a price and closing date. And you're going to be pulled in so many different directions. The agent, Cesar, is going to say, hey, we need this, 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 and this done. Your insurance agent is going to say, we need this, this, and this, and done. The lender is going to say, we need this, this, and I mean, you have a job, you have a life that you have to obviously continue to go to work, et cetera. So there's too many things being pulled in so many directions. So to remove the biggest potential stressor, which is getting your paperwork in order up front, even though it's a little bit of hectic up front, it makes all the difference in the world. Not that allows us to much quicker.
Yeah, and, it's like you said, it's a collaborative effort. So it's my client, it's myself working with the loan officer, bank, and then other people that are going through the inspections. We all have to kind of get this all done within a tight time frame in order to get something done within like a 9-day period. So Leo's 100% right when it comes to having everything all set up to be successful in closing and within that time frame. So even if we do say, hey, we can do it in 9 days, or that person says they could do it in 9 days, the first thing I'm going to ask is like, who's the bank? Like who? Right. I need to talk to that person to make sure that that's actually even possible. So kudos on being able to close a deal within that short time frame. Leo, so one of the things I always ask people that I bring on my show is asking them, what book recommendation do you have for anyone out there who's looking to understand, the loan process, or getting, pre-approved for a mortgage, or just understand the process in general?
Yeah, I think one of the best ones I've read is called Your First Home by Gary Keller. That's been, it's a little older, but it's going to give you an idea in terms of what to expect. Okay. And how to properly look at this entire process. Ultimately, most first-time home buyers, they're pretty well educated. So the internet, if you type in what are the first steps, it's most likely going to find some good resources. But that book has been super instrumental for people in the past. To not just understand the market, but also understand the overall process of the transaction. But then, like you said, once you have that in place, you work with who you feel most comfortable with. And, I would highly recommend Cesar, as the first next step, which is, hey, sit down with him, talk to him about, your options, talk to him about your ideas, talk to him about what you're looking to do, and help him not just guide you, not just guide you through the process, but, introduce you to the right parties, that might do the same for you. So that'll be the sequence, or at least the resources that I think are available for you to take advantage of.
Appreciate the kind words. So what I'm going to do is, I'll ask you right now, what is the best way for people to reach out to you?
Yeah, the best way for you to reach out to me would be probably to email me. So it's leo.anzoleaga, ANZOLEAGA @dkmortgage.com. And Cesar will put that information at the very bottom of this post. But leo.anzoleaga @dkmortgage.com. Or you can just reach me directly on my cell, 571-215-4499. That's 571-215-4499.
Cool. And I'll also replace any sites they could reach you via social media and stuff like that. So,
Yeah.
Leo, it's a pleasure to have you on the show. Again, you are guest number 2 on the Cesar Rivera Show. Pleasure having you here today.
Thanks for your time.
All right, man. Take care.